Hey, welcome back to the Hub channel. My name is Brandon Burton, and I am here with Jeff Beamer again this week, and we have an excellent show today for you guys. We're going to be talking about the market, Jeff's last trade that he did last week, as well as an upcoming trade that he's looking at and some other headlines going on. But Jeff, I did want to bring you on here and point out that since we've started your service over here, the Delta Neutral Strategy, you have been crushing it with 77% win rate. And if you look at the return percentage in the portfolio, it's over 150% since you started, meaning if anybody put money in, every dollar that anybody put in is now over doubled their money just by following your trades, Jeff. You've been doing an excellent job, and we've seen that week to week with every trade that you've been giving us. So let's go ahead and dive into last week's trade. Obviously, first, we talked about Nvidia last, and then let's go over everything else going on in the market, Jeff. By the way, welcome. Glad to have you back here.
The intro, yeah. I mean, it's
Yeah.
we are focused a lot on delta neutral strategies, and we have been focused a lot on earnings because that's a regularly scheduled occurrence. And last week I talked about Nvidia, which has traditionally been a big mover. And interestingly enough, I think the earnings were really built into the announcement, and for really the first time in a while, Nvidia just did not move through earnings. So here, we've been very consistent on our winners here on our Monday show related to stocks that we look at each week. But this time, Nvidia just did not move enough, and we lost about a third of the value of our straddle on the trade. So that's one of the important things to remember. Even though sometimes these are, a straddle or a strangle is a capital intensive strategy, it is really kind of hard to lose your entire your entire debit, because the stock usually does move a little in case, just like Nvidia did. It moved down a little bit, and we were able to profit on our put, but we lost money on our call, and that resulted in a net loss. But hey, we're very consistent. We're looking at more earnings this week, Brandon, and we're going to come out of the gate. There's lots of names this week having earnings that I think people should keep their eye on.
Well, looking at that trade, and I kind of watched that play out. We were looking for a breakout, obviously, with Nvidia, and I don't think you were wrong in putting that trade on, because typically we do see Nvidia break out to the upside or downside. It's a big mover. But I think in this case, it was a little more subdued. And I don't know if that is just what's going on with the macro picture, that there just wasn't enough enthusiasm in that trade to be able to play out like you wanted it to. But let's be honest, Jeff, that was the first losing trade that I think that I've seen since I've hosted the show with you. So there may have been one other one, but with that trade obviously being a loser, there's been so many other winners. So with that said, what's going on in the market right now? What are the headlines that you're looking at to get into this next trade?
Well, interestingly enough, headlines are really quiet this week. We're looking at kind of a post Thanksgiving holiday week. It is sometimes relatively quiet. I call it a tryptophan week for the markets. And if you're not familiar with what that term is, that is a amino acid that is in most proteins that makes you somewhat sleepy. Okay, and so here in the U.S. celebrating Thanksgiving week, and we love our turkey dinners. That's typically something that happens after a big meal, where you get the drowsy effect. And post holiday, where we were closed Thursday, half a day for trading on Friday. Today, very little movement in the markets, but we do have a busy earnings week. There are several companies. It's really going to be dominated by tech and retail. And interestingly enough, those are two sectors that are market moving. Everyone's got their eye on the impact of tech, and of course on the consumer as it relates to retail. So big week, considering that today is Cyber Monday of all days. And really Black Friday was a huge day for online sales, which is usually store sales, but this time it was online sales. We'll see at the end of today what the numbers are for Cyber Monday today. But lastly, bond auctions are happening. We had the 2-year and 5 years today go off, and some of the bond traders are saying it was about a B rating as they grade the quality of the auction, like how much demand there was and the rate that was kind of secured. And so the 2-year was weaker than the 5. The 5s dominated the market, but right now that just plays into the bond market overall, and I'll show you a chart of that here in a minute. So Brandon, really not
Jeff,
much
I
going on this week other than earnings, and
you you,
that's
you
always
mentioned
exciting. So we'll
yeah,
we'll
well,
keep
yeah,
our
our
eyes on
earnings. We'll look at that here in a second, obviously. But you mentioned tryptophan. I think everybody knows what tryptophan is, obviously, in the whole world. I don't think there's anybody that doesn't know what that is. But regardless, I would say that with Black Friday, you did mention that they did have a blowout Black Friday, over $9.5 billion in retail sales. I guess it was a record number this year.
it. Yeah,
They've
record.
never had that much, which record-breaking numbers, and it means the consumers coming back. And I did hear hint that they were potentially going to reduce interest rates here in March, which is quicker than they had anticipated. So I did all those things together, maybe. So I don't know if that's impacting the market. What are you seeing in the market right now with our market update?
Well, let's go through a few of the indices here real quick. I'm going to start with, of course, the Spider Index Trust (SPY). This is our proxy for the S&P 500. And really, I focus on this rather than the Dow, because the Dow is, of course, just 30 companies, and that we call it, your grandfather's index. So I've always focused on the S&P 500, and I have got some trend lines on here. And you may say, well, Jeff, they're kind of interfering with price. I can't see what price is doing because it's your drawing is interfering. Well, that's because, well, we're at resistance on Spider. Okay. We're right up against this 455. We got there close to that last Monday. I said, we'll probably kind of pause here. Sure enough, it's showing as resistance. Really, even if I put on my Heikin candles, which indicates trend, really the dominant theme here is that the candles themselves are getting shorter and shorter. Now, that can mean one of two things. That can mean consolidation before a continuation of the trend or a trend reversal. So here on Spider, it is just the rally is intact, but we're at resistance, and we will see if earnings or any other economic move can drive us through and push us even higher for a quote Christmas time rally. Now, the leading sector, of course, has been NASDAQ for a while here. They are off their V bottom as well. Big, big move. As you know, or maybe you don't, we do not like these vertical moves. Okay. These vertical moves often get retraced, and we are up here consolidating. Once again, I'll apply my Heikin candles, and you can see here where we're getting a little wicky. The past two candles here are showing wicks on the tops and bottoms of a very small body. That is indicative of possibly a trend, a reversal in trend. However, we won't know until it happens. So it's just something to kind of keep our eye on this week as lots of news comes out in the markets. Now, the laggard, of course, has been small caps. IWM, the Russell was down today about 30 basis points. That was the loser as far as the bigger moving, broader indices. It typically has been, but as you can see, it is also right up against some resistance that actually goes back quite a ways. These lines actually go back to previous, as you can see here, these previous tops. And the saying goes, prior resistance becomes future support and vice versa. Past support becomes future resistance. And that's exactly what we're seeing here in these moving averages or these indices with these stocks beginning to consolidate. Now, one thing here, let me clean up my chart a little bit. I'll take off my moving averages here real quick because I want to show you we do have a little technical pattern, what I call a mini pattern forming here of this wedge, and this is kind of a preview to a possible breakout. Now, the odds are this would be a breakdown. However, there is what's called a failure rate, and this could be possibly setting up for a breakout, which is why we trade straddles a lot on individual stocks. Now, can you trade a straddle on an index? Yes. There are some things that you probably need to know about doing that, but you can do a straddle on an index like the Russell. It all involves proper timing, of course. So, Brandon, that's it kind of on the broader markets. Now we can jump over to energy. USO, we'll start with USO, and it has just fallen back into the channel. And the channel that I'm referring to is basically, if we draw just a trend line down, we kind of came up and tested the upper channel, and here we fell off, rallied back up last week, but then today we're down over 1%. The overall trend continues to be down on energy and oil. Okay. Monitoring gas prices is pretty easy. You can do it locally, just driving around, noticing gas prices at the pumps. And I've seen them kind of inch down just a little bit, not as drastically as they had been moving down, but they have trickled down just a little bit on USO. And of course, XLE is a sector that has stalled out down here around, and I don't have a headline for XLE, but it kind of follows USO, and it's bottoming out here around this 84, just channeling sideways right now. Now, going over to gold or metals, okay, really, we've broken out, okay? We look to be, I'll just clean up my chart here. We have broken through resistance up here at around 186, 185, 186. We closed today at 186.75. If we get a confirmation higher candle tomorrow, that will confirm the uptrend. This would be a good chart to apply Heiken Ashi candles. This gives us then clarity that the trend higher is in place. Okay, notice there's no wicks on the bottom of these candles. That just refers to a nice strong trend. And this would kind of confirm that, yeah, we're going to continue to move higher in metals. Well, specifically gold. We'll take a look at silver here in just a second. Okay, but gold continues to press higher. And, well, speaking of silver, it was the winner today. It moved up, not only moved up, but it gapped up. It is facing some resistance now, okay, where gold has already broken through it. Silver's getting back up here into some previous resistance around the 22.5, $23 area. So it's got a little bit more to go before really confirming that obviously it's in a big trend, but this is pretty vertical, and that's what we want to keep our eye on. The angle of ascent here on this move, like on the other indices, is very concerning. It makes you kind of keep one eyebrow raised and go, really? Can this be sustained? That would be the question that we have. And then finally, as I've mentioned previously about the bond auctions this week, let's take a look at some of the bonds. The TLT, which is the 20-year plus Treasury ETF. Okay, so this is what we call the long end of the curve. You'll notice here that we are in a confirmed bullish uptrend. Okay, we're off the bottoms, we're rallying, which means rates are dropping, bonds are moving higher. But here is my concern. Okay, I'm going to consolidate my chart here a little bit. I'm going to put on a Elliott wave count here on this stock, and we have a well-defined, qualified wave 4 right now that is being tested. Okay, we're just above the 31.8% retracement. This can go up to 61.8 really, in my book, before it kind of disqualifies this wave 4. But as you can see here, we have the nice 1-2 pattern, big long 3. Your 3 is always your longest, strongest wave. Now we're in this wave 4 pullback, and really, if I show more time here, this is what's concerning. If this technical pattern holds, okay, if I pull off my chart here, you'll notice the wave 5 target. This target goes out, if I go out to the far end of this target goes out to August of next year. Okay, the middle of this target where the 5 is around July of next year. The reason this concerns me is because bonds are a long-term play. It takes a while for a bond fund or even a bond to make a big move. For example, going from $90, where it's trading right now, down to 70, that doesn't happen really overnight in a typical market. It's a gradual thing. Well, guess what? That's a gradual move right there. That is not indicating a big drop in a short period of time at all. That is a big gradual move. That's the only thing I would keep my eye on as it relates to bonds specifically. Now, we have, of course, TNX, which is what some people like to look at. That is the interest rate itself. And you can see a similar move here, the wave 4 pullback almost to that 38%. And now we're going to look at where that wave 5 target. So these charts literally complement each other. Bonds moving higher, interest rates moving lower. However, we're getting close to possible transition. Okay, a transition area where that kind of reverses. Now, one thing to keep an eye on is also the short end of the curve. We do that by looking at SHY. Okay, SHY is the 1 to 3 year Treasury bond ETF, and you can see that this bond fund is rallying also. What you would hope, okay, is that today TLT was up 1.67%. Okay, SHY was only up 12 basis points. That's the type of action you want to see, which will help narrow the inverted yield curve. However, when they're both going up, okay, and you have a higher short end, meaning the 2-year, and a higher long end, which means 10-year plus, that still indicates a potential economic, non-healthy economic conditions, okay? So if we, in fact, if we take a look at that inverted yield curve, we'll see that all that it's done, Brandon, is flatten out. Really, over the past week, we're maintaining this 45 basis point inverted spread. We would really like to see this flatten, but flatten with short interest rates coming down, longer interest rates going up, to equalize and get back into what we call contango in the bond market. So, Brandon, that's kind of our economic update there. Anything stand out to you and all that?
Well, watching that, I mean, the hike in the sheet was really interesting to see that and watch those wicks, and the way you explained that was really, really well done. I kind of understood those a little bit for the first time seeing those trends, but I don't think I'm going to be putting on any long trades right now. I think I'm just with you. I'm going to watch right now with the general market, the S&P, and watch the QQQ and see where that goes. I am worried more, just like you are, about a pullback coming up here, and I think this is, in broader terms, more something that everybody should be concerned about, and not putting on a real long trade or a long call option in any of those things. So looking ahead, I know you said we have a busy earnings week. What are we
Yeah.
looking at as far as earnings going on right now,
Well,
Jeff?
let's
What do
take a
you
look
have for
at
us?
let's take a look at the earnings calendar here. We have right after market close today, we had Zscaler um, start off our week as far as notable stocks that I would look at. Zscaler came out with their earnings announcement, and the stock promptly dropped 7%. So here we have a tech-related company that is showing some weakness. This is a strong stock. This stock has rallied very nicely. It's a $190 stock, and now it's down 7%. Other notables that are kind of coming up this week. Really, we get busy tomorrow and Wednesday, even though, well, really the rest of the week, I would say, because we have CrowdStrike tomorrow, we have Intuit tomorrow, and Hewlett Packard. Those are some names that are pretty notable. And then Wednesday, of course, we have Dollar Tree and Hormel in the morning. We also have Foot Locker on Wednesday. That tends to be a retail stock that moves around quite a bit. And then Thursday, we have Kroger, Academy Sports, Marvel Technologies, and Ulta Cosmetics. So the week is really filled with um, retail and some tech, which could be market movers. Okay. And so for our stock that we're going to watch is Marvel Technologies. That is the stock that we're going to kind of keep an eye on this week. This is a $55 stock that is priced pretty well for earnings. It's been a historically decent performer. It's been moving an average of about 15% on earnings, and yet the way this stock is currently priced for the straddle, we're looking at doing a straddle on this. The straddle is about 8%, 8 to 9% of the stock price, which is great. And it is priced to move about 10%. So if the stock moves its historical average of around 15%, then this will be a very nice performer, a good winner for us, and continue our trend that we've had really since we started the show. So Marvel Technology is the one I'm really keeping my eye on, and that we're going to be watching closely this week as we go through earnings. And that report date I can't recall if it's Wednesday or Thursday. Let's see here. It is coming up Thursday. So,
Yeah, I mean that's
what
a
do you
good
think
one to
about old
watch, and
Marvel?
yeah, I mean, I love that I love that trade, and obviously, I think we're gonna get back on point with this one. The way you're setting this up looks really good, Jeff. And with its past historical moves on all announcements and things, I don't think we're wrong in setting this play up. So I love it. I love it, Jeff. Um, as always, I really do appreciate you coming by the Hub channel today and filling us with your wisdom. You really taught me something today, and where can people sign up or where can they watch you and learn more about your service? I don't think we've mentioned that yet this show.
Well, we do have a free guide for folks to download, and it shows how we trade straddles and how we've been so successful. It goes against kind of the traditional grain that most people think of when they think about trading straddles, which is why we tend to be so successful with it. But you can download that for free at ewotrader.com/straddle. Now, what you see here on your screen is it's /straddle guide. It'll take you to the same place. Okay. So ewotrader.com/straddle, and you can download my free guide there and get a good understanding of how we put these things together and the timing of our trades and how it's all done.
Yeah, thanks for that, Jeff. I think that's really important for people to see. That guide is very comprehensive. It kind of goes through everything that Jeff's talking about and everything that he's going to talk about. So you can read that guide, follow along, see what Jeff's doing, watch the trades he's putting on, and it kind of helps things out. Jeff, thanks again so much for coming by. If you haven't subscribed to the channel, please do so. A click of a button will get you subscribed so you can watch Jeff and all of our other guests that we have here on the Hub channel every single week and multiple times per week. We're expanding our broadcasting, and we're super excited to have some new guests going to be coming on even more often coming up here in the next couple of months. They're going to be able to fill our little stock trading reservoirs with much more information. Thank you, and we'll see you next week here at the Hub channel. Have a good one.
Have a great week, everybody.